Ooh, I think we're live. Usually I'm a little bit live a little bit earlier than I actually think I am, so I guess I'm just going to start talking and let's see if that, if that actually works out or not. What's up, everyone? Hope you can hear me well, hope you can see me well, hope my camera is not frozen this time for some reason, because last week my camera was actually frozen for some reason during like half of the video, so I'm very sorry for that. If you at some point do if you see that the camera is frozen at some point, then definitely let me know. I think I'm a little bit tired today. I'm sorry for that. I did a pretty long walk today because it was actually a very nice weather today. Pretty insane, actually. I live in the Netherlands, and last week we had like minus 15 degrees Celsius. It was snowing. It was yeah, pretty cold, and now it's like plus 15 degrees Celsius, and everyone's walking outside with shorts and short sleeves and stuff like that. It's pretty insane how the weather can just turn around. So yeah, I did a pretty long walk today, a little bit tired maybe. What's up, Ricardo? Tudo bem? Tudo bem? I hope you're actually Portuguese or Brazilian Portuguese, because I think your surname tells me that you're Portuguese or you speak Portuguese. So what's up, man? Today we're going to take a look at one of your favorite stocks. Or, well, I'm not even sure if it's one of your favorite stocks, but we're going to take a look at Li-Cycle, which is the battery company that's going to be acquired by PDAC, or I don't even know what the SPAC is actually called, but PDAC is the ticker symbol. That's something we're going to take a look at today. So, yeah, let's see. You can hear me well? Just let me know if everything's alright, and if not, then I'll need to change something. But I believe I can see my mic going up and down, so that looks pretty good. I believe I saw my... yeah, okay, so you can actually hear me. You're Portuguese. Very well, very well. I'm actually going to, I think this Friday, I'm going to do an interview with a Portuguese guy as well, who knows a lot about a green economy, so that's going to be interesting for sure. Okay, so with regards to the polls, I set out, I think yesterday or the day before, actually, I'm not even sure. I did 2 polls because I was going to do a like a masterclass. It sounds way fancier than it actually is. But I just wanted to do these things live with you, so I can see that if there are like any questions or if there are any issues that come up with my valuations. Of course, just before we begin with this stuff, keep in mind I'm not an expert, I'm not a financial advisor. I just kind of like copy-pasted this method from Mark Haig, whom I've done an interview with a while ago. Actually, let's go to my channel to show you guys the stuff that I'm talking about. Let's see if we go to videos. So I did an interview with Mark Haig, this guy over here, a week ago, more or less, and this guy writes a lot of articles about SPACs and SPAC valuations, and I basically just copied his method and pasted it to about like 30 SPACs right now. And yeah, seems to work pretty okay-ish so far, but of course people have questions about it, and sometimes I still struggle a lot with explaining things because yeah, that's quite difficult sometimes, you know. So when was that? Like last Friday, was it actually Friday? Yeah, time flies, man. So on Friday, I posted this like SPAC guide, if you will. It's basically all my knowledge about SPACs within one video so that I can refer people to that video instead of explaining everything over and over again. So I hope that is going to be useful to people as well. Let's just go back to the polls for a second. So I basically, in that SPAC video, I talked about 2 methods that we're also going to talk about today. The first method is a so-called discounted enterprise valuation method, more or less. And we're going to be looking at PDAC, the SPAC PDAC, which is merging with Li-Cycle. And now actually I do get an error within YouTube saying that YouTube is not receiving enough video to maintain smooth streaming. Yeah, okay, I'm not sure. Well, if you if you experience some kind of latency or whatever, let me know. So yeah, the second method is a little bit different. We'll look at THCB today, which is going to merge with Microvast. Actually funny because both of these companies are actually battery companies, battery SPACs. So yeah, let's see if we can get some interesting stuff going on. Good morning, Joe. Happy to be having my coffee this morning with everyone. Well, it's 6 o'clock p.m. over here, so I'm almost having my dinner over here. So where you're located, Joe? In like the west of the United States or something like that, or is it just what, like Eastern Standard Time? Maybe, I don't know. I don't know. It's too difficult. So yeah, let's just talk about a few things first. If you want to use the sheets that I'm going to use today, so the Excel sheets that I'm going to use today, you can go to nesami.com/discord. Then you can actually join the Discord if you leave your name and leave your email address. You're just going to click on submit, and then you're going to get access to this Discord over here. Look at that. And Ricardo was actually already talking about the SPAC valuation about PDAC. So let's see, what was I going to tell? Yeah, so if you have access to the Discord, you're going to be brought to this Discord over here. I have one of the channels that says SPACs, and if you go to that channel, you can click here on pinned messages, and here you're going to find two files, one of them with all the valuations I've done so far on my YouTube channel. So you can just check out which are the most undervalued ones, most overvalued ones as well. And this one is the link to the Excel sheet that I use more or less. I did a slight upgrade, if you will, to the sheet that I'm using, you'll see today. But yeah, it's more or less the same sheet that I'm going to be using today as well. So if you just want to go ahead and join me in valuing this SPAC, we're going to first talk about PDAC. Then you can actually go to Discord, go to this sheet, and you can just do everything alongside with me, so we can all do it at the same time. How cute is that, eh? Alrighty. What else do we need to talk about? Thanks for the SPAC valuation Excel sheet. No problem, Dench. Will be useful these days. Yeah, I hope so. So, maybe I should talk about that first. Yeah, because I do want to talk about one thing first, because of course I'm focusing a lot on SPAC valuations. But you shouldn't be looking at them as like the holy grail or something like that. They're not the only thing that are going to determine where the price is going, of course. Fundamentals, of course, matter a lot as well. Technical analysis can matter a lot as well. News, I don't know, whatever people say about the stock is going to matter a lot as well. So there are just a lot of factors, and SPAC valuations are just one of those factors. But it can actually be a pretty good guideline, if you will, to see more or less where the stock should be more or less, right? Not exactly. So yeah, that's what I wanted to say. First of all, have you heard about Joby Aviation? No. Going public? Really? Oh, that's actually interesting, because I was looking at Joby SPAC, Joby, because they're in the drone industry, right? Or something similar. Because I was hearing about this company because of the EHang situation this week. Oh, wow, really? That's interesting. Thank you for telling me. So let's take Joby, SPAC, RTP. Thanks, Ricardo. Suppose that's more or less the name I suppose that's more or less the way to pronounce your name. I'm always, yeah. I want to learn Portuguese. I know Spanish, but Portuguese is a language I definitely want to learn. It's just interesting to me how they pronounce the R's as an H or something like that. Cool. I'm going to be looking into this. Thank you. They're close to Archer. Yeah. Yeah, I did a valuation video about Archer. Well, I made it like on Friday or Thursday even. No, I think on Friday, but I published it yesterday. Okay, so we talked about this, so we can close that. We talked about this, but we might need that later. We don't really need TradingView just now. So let's just jump into the valuation of PDAC first, eh? Let's see. I'm going to take a sip of my glass, and then you're going to take a look at this beautiful picture. Why did they put up this picture first? I mean, this is just the most boring picture ever for a battery company. Whatever. All these IKEA colors, like blue and yellow. Oh my god. Okay, let's go. So, I didn't really do a lot of preparation for this valuation because I just wanted to do it live with you guys and girls. Are there any girls in here? Any women? I'd like to know. Because about 10% of my viewers are actually female. So I wanted to do this live with you. I did a little bit of preparation just to see if everything works okay-ish, and I think it should be working okay-ish. So PDAC is a battery company. Yeah, as I said, I haven't done any additional research about this company. But it's like a recycling, like a battery recycling company. just like we see over here, a sustainable lithium-ion battery recycling company, which is the missing battery supply chain step. Okay. Well, they think that they are in the middle of everything in the EV revolution, the ESG goals, and the domestic supply of strategic materials. Let's see if we can find anything interesting happening over here. Yeah, usually what I do is just scroll very quickly through the presentation just to see what kind of things they want to tell us. Because I do kind of think that often these investor presentations are a little bit like... yeah, a little bit like marketing almost, if you will. They try to attract you to this SPAC, as is still my opinion. So they say there's a lot of battery waste right now, and they probably want to fix that. In 2050, we all want to be net zero, so that makes sense, of course. Headquartered in Toronto. Oh, really? Okay, that's interesting. Not sure how international they are, of course, but that's probably somewhere in the investor presentation as well. Yeah, but of course what we are going to focus on a little bit more is the actual valuation. Look at that. So, okay, they're talking about regulation. So they're talking about the US, Canada, China recovery rates. That's probably recycling recovery rates. European Union doing its things as well. That's all good. Look at this guy, Andrew Cuomo. Are people still upset with this guy? I mean, I watch Anthony Pompliano's podcast, or podcasts like news every day. I think he's quite upset with this guy. Yeah. Okay, financial overview. Here we get some interesting stuff going on. Here we have the revenue and the EBITDA, or EBITDA, whatever you want to call it. I'm going to try to call it EBITDA, or, well, it doesn't really matter, of course. I even did a poll about this. Most people say EBITDA, some people say EBITDA, and some people get really upset when I say EBITDA, and it should be EBITDA, so yeah. But you can see that in 2021 they have just not a lot of revenue just yet. They do expect to grow that by quite a bit in the next coming years, and by 2025 they expect, and of course expect, as I say in almost all my SPAC valuation videos, is a very, very important word, because yeah, you'd never know what is exactly going to happen. But yeah, they expect to scale from $12 million in revenue in 2021 to $958 million in 2025. So that's almost, that's only about 4 years time, of course, with a nice compound annual growth rate, a CAGR, as they beautifully say, of 82%. Then we can see their EBITDA over here, growing from -6 million in 2021 all the way to 541 million in 2025. So that actually means they have a pretty large EBITDA margin as well, 56% in 2025. EBITDA margin meaning the percentage of EBITDA compared to the revenue, and 56%, as far as I know, is pretty high. So that's pretty cool. That's pretty cool. That usually gives them quite a lot of room for, yeah, just to have money left over at the end of the month, eh? And also for us people. Let's see, Lilium also rumored with going public. I don't know what Lilium is, to be honest. What's up, Tom? Lilium. Let's just write it down. Ooh, Gina, female, let's go. Susan, let's go. Look at this. We got 2 women out of 22, which is 10%. Well, that's exactly my the rate right now. I actually really love to see women in this space, and it's actually one of my long-term goals, by the way, to have basically everyone investing, and especially women as well, because I think women not investing is simply making us have this gender gap, making it bigger and bigger, you know what I'm saying? Basically meaning that men, when they invest, well, they're going to grow their wealth faster and faster, whereas women, if they don't invest, they're going to stay at the same amount of money. So it's great to see Gina and Susan in here and actually getting more knowledge about this stuff. That's great. Thank you for being here. Anyways, let's get started, shall we? PDAC life cycle. Let's actually bring up my valuation sheet. Let's make this, let's get rid of this. Let's pull up PDAC over here. Let's make this a little bit more like this. Very pretty. All right. So let's zoom in a little bit here so everyone can hopefully see a little bit better. What they usually do is they start out with a share price of $10 per share, right? If you know a little bit about SPACs, you might already know that. Most, like 99% of the SPACs start trading at $10 per share. And SPACs also usually don't go lower than $10 per share because before the merger is completed, you can actually redeem your shares for $10 per share, which basically means that you can turn in your shares in exchange for $10. So you basically can sell your shares at all times at $10 if you would like to. So that usually means that a $10 per share is the minimum that the share is going to start trading at. $10 per share. Again, I'm a little bit tired today, so I'm sorry if I'm speaking very weirdly today. Companies SPACs like PSTH, for example, starts out at $20 per share. But yeah, again, like 99.9% probably of the SPACs are actually starting out at $10 per share. Anyways, they say that they're going to have about 167 million shares outstanding after the merger, which is very important to note. After the merger, pro forma basically means after the merger. Here you can see the equity value is, well, $1.665 billion. And the equity value basically means the same thing as the market cap. Right, so you probably know what a market cap is. It's basically just the price per share multiplied by the amount of outstanding shares. And in this case, if you do that with $10 per share and you multiply it by 167 million, you're going to arrive at this market cap after the merger of $1.665 billion. Okay, here they say 167 million shares outstanding. Well, it's probably going to be 166.5 million shares outstanding, but they of course rounded it up to 167 million. So I just took the liberty, if you will, of putting, instead of 167 million, I put in my Excel sheet 166.5 million to arrive exactly at that market cap of 1.665 billion. Okay, so based on a share price of $10 per share, the market cap of this SPAC, well, not of the SPAC, of the company actually, that is going to be acquired by the SPAC, so Li-Cycle, is going to be $1.665 billion, okay? Then you have also a difference between the equity value, so again, that's the market cap, and the enterprise value. The enterprise value basically means the value of the company, so how much the company is actually worth. The difference between the market cap and the enterprise value, so between the equity value and the enterprise value, is the amount of cash they have. Sometimes it's debt, sometimes it's cash. In this case, they're going to have a positive amount of cash on their balance sheet of, as they call it, $566 million in cash on their balance sheet. So then you can do something else. You can say, okay, so the market cap is 1.665 billion, right? If you take off the amount of net cash, which is 566 million, you're going to arrive at this enterprise value of $1.099 billion, which is also the number that is presented over here in the investor presentation. So then you can say, okay, based on a share price of $10 per share, this company, Li-Cycle, is worth about $1.1 billion. Very well. So that's basically the first step that you need to go through. Let's see if we have any questions so far. Yeah, I'll check out the comments probably later on. I'm just now going to go through the evaluation. Okay, so when we've done this, we can say, okay, $10 per share, very well. But if we go into TradingView, for example, and we take a look at the current price of this stock, we can see that it's currently trading at $13.49. So that's the number that I put over here in the price under now. And that means if we go and make this a little bit bigger, the price has gone up from $10 to $13.49. So that also means that the market cap is going to go up from this number, $1.665 billion, to this number, $2.246 billion, okay? So based on the current price per share, Li-Cycle has a market cap, a pro forma market cap after the merger of a little bit more than $2.2 billion. Very important, because sometimes you might say it's way lower because the SPAC has a low market cap of maybe, I don't know, 300 million. And some people say, well, this is just a company of 300 million. But no, you always need to take a look at the total amount of outstanding shares after the merger. And then you're going to arrive at this market cap of 2.2 billion, okay? So then again, if you go to the enterprise value, you simply take this market cap of 2.2 billion, you subtract the amount of net cash of 566 million, and then you're going to arrive at this enterprise value of $1.68 billion. Okay, so based on a share price of $13.49, the company, pro forma, after the merger, is worth $1.68 billion, right? Hope everything is clear so far. Very well. So if we've done that, then we can actually go to the next step, which is to go to the pro forma, or sorry, to the, actually I need to say something different, which I almost forgot. So we said that pro forma, there are going to be 166.5 million shares outstanding, right? But if you go to, let's see, can we see it here? No, they actually don't mention it. I think they do mention it in the case of a Microvast. Sometimes, and that's probably also going to be the case of Lifecycle, there are going to be warrants outstanding. Warrants are options that can be converted into shares at a later point. Don't ask me a lot about warrants because I don't know enough about warrants, but I do know that usually what happens is that if a SPAC, if a company that is acquired by a SPAC trades above like a certain threshold, usually I think it's $18 per share, during a period of like 20 trading days out of 30 trading days, more or less, after the merger, then people are allowed to trade their shares into, the company actually has the option to make people exercise their warrants. So basically the company says, okay, now you need to take your warrants and you need to convert them into shares. People can also decide to convert those warrants into shares themselves. Basically, not whenever they want to, but I believe like after 30 days they can do that whenever they want to. All of that, what that means is that the amount of pro forma, or the amount of shares outstanding after the merger, could actually be higher than the number that's over here in the investor presentation. You also have something else which is called earnout shares, which I believe, I'm not sure if this is new or if SPAC started adding this, but I think that based on a certain threshold, a certain price level, the company can actually issue more shares as well. So usually when the company, or when the stock is trading above, like let's say $15 per share, the company can actually say, okay, now we're going to issue 10 million more shares, okay? So that means that the amount of outstanding shares is not necessarily 167 million. It can go up, it can also go down, but usually it goes up, right? Usually it goes up. So you need to take that into account as well. And I find it honestly very difficult to determine the correct amount of outstanding shares after the merger as well. I suppose they're going to be disclosing that in their SEC filings. So yeah, I'm going to pay attention to that, especially with Switchback Energy, which is going to have it's another vote on this Thursday. And I'm going to see how many shares there are going to be outstanding to see if there's like a major difference between that number and the number in the investor presentation. So that's just a little side note that I want to talk about. Very well, let's go back here. Okay, no questions so far. Very well. If you have any questions, let me know, by the way. Huh? Okay, so let's actually go now to the future enterprise value. The future enterprise value. And we kind of need two numbers for this. First of all, we need an EBITDA or a revenue number. For this SPAC, PDAC, which is going to merge with Lifecycle, we are going to be using the EBITDA numbers. We're also, apart from that EBITDA number, so simply the amount of EBITDA in a certain year in the future, we're also going to need a certain multiple to apply to that EBITDA. I'm going to explain a little bit more about that later. So let's first talk about that EBITDA, okay? And I believe we've already seen that number. Let's see if we can find that number over here as well. No, I don't think it's over here. So for today's valuation of Lifecycle, we are going to be looking at the numbers of 2024. 2024. So we're also going to be looking at the EBITDA of 2024. Now, let's first go back here. Let's zoom out a little bit. Let's find the EBITDA. We were already looking at the EBITDA before. It's over here. Very well. So here we can see the EBITDA, or well, the expected EBITDA, of course, of this company Lifecycle in the future. In 2021, they expect a negative EBITDA of -6. 2022, positive of 3 million. Then it goes up to 109 million, 339 million, and in 2025, $541 million. Very well. So, as I said, today we're going to be looking at 2024 numbers. That's just because they chose to take that number into their calculations. So we're going to be looking at the EBITDA of 2024, which they expect, and of course expect is an important word there, they expect to be $339 million. Okay, so that's also the number that I put over here in my Excel sheet, and this is actually the little upgrade that I did in my own Excel sheet. So you can just plug this in over here. If you don't have this, then you can just remember it for now and use it later on. So the EBITDA we're going to be working with is 339 million. So that's the first one that we're going to use, the first number we're going to use. Now the next number is an EBITDA multiple. Let's see if we can explain what that means basically while I take a sip of my water. Let's say you have a company and the company is worth $1 billion. So an enterprise value of $1 billion. Let's say their EBITDA in a certain year is 50 million. Okay. So again, let's actually pull up a calculator. So let's say you have a company that's worth $1 billion. And let's say they have an EBITDA of 50 million. So that means if you take that enterprise value and you divide that by the EBITDA, you're going to arrive at 20, which is going to be called the EBITDA multiple, right? So if you have an EBITDA multiple of 50 million, if you have an EBITDA of 50 million and you have an EBITDA multiple of 20, then your enterprise value is 1 billion, okay? So I hope that explains more or less what an EBITDA multiple is. So what we are going to be looking at is the EBITDA multiple of Lifecycle, and we're going to compare that with the EBITDA multiple of other companies out there. Very well. So as we can see in 2024, which is the year we are going to be looking at, Lifecycle's EBITDA to, or EV to EBITDA ratio rather, is 3.2x, right? Because we said that, well, the enterprise value, or sorry, the EBITDA was 339 million. And if you multiply that by 3.2x, you're going to arrive at this enterprise value, which is more or less the same as we have been seeing in the pro forma enterprise value. Exactly. Okay, so 3.2x for Lifecycle in 2024. Is that a fair one? Is that a low one? What should we be looking at? Well, the thing is, we don't know exactly what is going to happen in 2024, of course, but we can see a few things. We can see, for example, that they say that electrification facilitators in 2024 are going to be having an EV to EBITDA multiple of 10.9x. They say that disruptive battery EVs are going to have a multiple in 2024 of 6x. They also say that if you look at the current year, so 2021, battery manufacturer, I can't speak anymore today, I'm very sorry. Battery manufacturers, okay, very well, in 2021 have a multiple of 21.4x. Waste management and recycling providers in 2021 have a multiple of 16.1x. And lithium producers, they in 2021 have a multiple of 35.9x. So now the question is, what is a fair multiple to have for a company? It's very difficult, right? Because here you see multiple of 6x, 10.9x, 16.1x, etc., etc., etc. So it's very difficult to come up with a fair multiple. Well, you can see that these companies and sectors in 2024, 2022, the median multiple here is 15x. It's not entirely fair because they look at 2022 and 2024, so yeah, it's not entirely fair. And here, if you look at 2023 and 2021, the median would be 21.4x. Now they say, okay, if you look at these multiples, they say, well, maybe for our own company, a fair multiple would be 20x to 2020x. I'm not entirely sure. Sorry, I'm not. A 20x to 22x, rather, yes. So I'm not entirely sure if this is a fair range of multiples, to be very honest with you. It could be a little bit on the high end. especially if you look at the disruptive battery EVs, for example. I suppose this is like just EV companies, of course. They have a rather lower multiple compared to the 20 to 22x range we've just been looking at. But on the other hand, if you look at lithium producers, they have a quite high multiple of 35.9x. So you could actually say, yeah, sure, that makes sense. And if you look at battery manufacturers, well, in 2021, they have a multiple of 21.4x. So you could make a case that a range of 20 to 22x is actually fair. That could be the case. So I'm actually wondering, what do you think? Do you think that these multiples are justified or not? Because I think I already see a question about that. Let's see. Why do some companies have much higher multiples than others in the sector? Exactly. So yeah, that is a little bit different, right? Difficult. I would say that usually if you are just looking at the same sector, there are certain companies that are simply bigger, that have maybe higher growth, that have maybe, I don't know, better management or whatever. People don't just look at the multiples, of course. They also look at other things, right? If you compare, I don't know, Tesla versus Volkswagen, people are going to be looking at Elon Musk and say he's a great CEO, and whereas they might not find the CEO of Volkswagen all that great. So they're not going to be looking at just the multiple, of course, but that does actually mean that the enterprise value of Tesla is going to be way higher compared to Volkswagen, right? That also means that, well, you could have a way higher multiple for Tesla compared to Volkswagen. Hope that's more or less, an answer to your question. Also, why do different companies show the multiples in a specific year? In this case, why did they choose 2024? Yeah, very good, good question as well. So with regards to the multiples, and let's actually go back to this over here. You can't really use the numbers of 2021, for example, in this case, because they simply don't almost have any revenue. As we can see in 2021, they're only going to have $12 million in revenue. And the EBITDA in 2021 is going to be -6, okay? So you can't really do a lot of calculations with that, especially because it's a negative number. In 2022, well, it's still a very low number as well. So if you want to do calculations with an EBITDA of 3 million, it's going to be quite difficult as well. So in this case, what Lifecycle says is, okay, you know what? Right now, we don't really have a lot of revenue. Therefore, we don't really have a high EBITDA either. What we are going to be looking at is the future. So why did they choose 2024? Well, yeah, maybe they could have also looked at 2025, but I suppose that's because they looked at the other companies. They looked at these companies out here, and they saw more numbers for comparable companies in 2024, and they didn't really find the numbers for 2025. That could be one of the reasons, right? I'm not sure if they actually mention any reasoning for using 2024 instead of 2025, but it does make sense that they do look at 2024 and 2025 instead of 2021, 2022, 2023, okay? And this is also probably where the company gets a little bit more stable compared to the compared to the earlier years out there, okay? So I hope that makes a little bit of sense as well. Okay, so I hope you believe that this is a fair range of multiples. If you think this range of multiples is too high, you can of course change that. You can of course say, well, if you look at these multiples, maybe, I don't know, 15x to 20x is a more fair multiple range. That could be the case, but that is for you to decide. The company decides, okay, we're going to be using a range of 20x to 22x. Very well, so we're going to be working with that as well. Okay, so we have an EBITDA of 339 million in 2024. We have a low multiple of 20x. We have a high multiple of 22. The only thing you now need to do is simply take that EBITDA and multiply it by the low multiple and the high multiple. Well, if you do that, let's also pull up the calculator to make sure that the Excel sheet does it correctly. If you take 339 million and you multiply that by 20, you're going to arrive at this enterprise value of $6.78 billion, okay? That is also the number over here in the Excel sheet. Very well. And let's now do exactly the same thing for the high multiple. So again, we have that EBITDA of 2024 of 339 million. We multiply that by 22. And you're going to arrive at an EV, an enterprise value of $7.458 billion. Okay. So right now we already have these enterprise valuations. And let's actually go here. We can now also say, okay, we have a low enterprise valuation in the future. Remember, this is in 2024 of $6.78 billion. And a high multiple, a high valuation of $7.458 billion. You can now also say, okay, the midpoint valuation, which is basically going to be the average between these two numbers, is going to be this number over here, which is just the average number between these two numbers. So the midpoint future enterprise valuation would be $7.119 billion. Okay, again, that's for 2024. So that's the first step that but one of the most important steps we need to take into account. And again, keep in mind a few things. Let's actually go back here. Let's go here. So for the valuation, or for reaching a fair multiple, we were taking a look mostly at 2024 of life cycle and 2021 of battery manufacturers, these companies and these companies. Okay, so there's a discrepancy between these 2 years: 2024 for life cycle, battery manufacturers 2021. So that means we're not looking at the same years, and that means we now need to discount the enterprise value back to the present. Okay, it's a little bit difficult to actually explain that with words. Usually, when I write it, I more or less know how to write it, but when I say it, it's very difficult to actually say it. But basically, what you need to take into account is that you're looking at 2024 life cycle and 2021 battery manufacturers. Since there's a discrepancy between these two numbers, you need to discount these numbers, these enterprise values, back to the present. Okay, and now we're going to do that. So, we have these enterprise values in 2024. We're now going to discount that back to 2021, which is the year we are living in. How are we going to do that? Well, there's a simple formula for that. First of all, when I do that formula, let me give you a small example. Let's say, again, you have that company of $1 billion. Let's say this company grows at 20% each year. 20% each year. How large would the company be after 5 years? Well, you can simply take that enterprise value of 1 billion and you can multiply that by 1.2, right? So after 1 year, it would be worth 1.2 billion. After 2 years, it would be worth 1.44 billion. Then this number, then this number, then this number. So after 5 years, your company of $1 billion right now would be worth almost $2.5 billion. Okay. Well, with Lifecycle, what we've just done is we right now know the future enterprise valuation. So we basically know this number, right? We know the 2.5 billion number. We now want to know what is the current enterprise value. So we want to know what is the 1 billion number in this lame example that I just gave you. How do you do that? Well, what you can do is you can simply discount it back in time. You can simply take a certain discount rate. In this case, we're going to be going with a discount rate of 20%. And then we're going to arrive at a current enterprise value. If you would do that for this just simple example that I just gave you with the $1 billion company, well, you can simply divide it by 1.2, right? This would be the number in the year 4, year 3, year 2, year 1, year 0. So again, now you can see that we've gone from the future enterprise value back to the current enterprise value. We're going to do exactly the same thing for lifecycle as well. So first of all, we saw that for the low valuation, the enterprise value is $6.78 billion. I'm not going to put in all the zeros because this is actually enough. And we can now do that with a discount rate of 20% for a certain amount of years back in time. We said we have been taking a look at the year 2024, which is 3 years away, so we need to discount it back 3 years in time as well. And we're going to use a discount rate of 20%, which is very common with SPACs. You can make that higher, you can make that lower, but usually with SPACs, people do use a discount rate of 20%. So if you do that, if you divide this by 1.2, and you do that 3 times, because we need to go 3 years back in time, you're going to arrive at this number over here, which is 3.92 billion. Let's see if this is also the number over here. Yes, it is. So the Excel sheet agrees with us and says, yes, that's exactly the discounted enterprise value. So according to the low multiple we've been using in the previous step of 20x, Li-Cycle currently, after the merger, would have an enterprise value on the low end of $3.9 billion. Okay, let's do the same thing for the high valuation. So let's say, again, the high valuation was 7.458 billion. Well, we can do exactly the same thing. We can divide it by 1.2, and if you want to go a little bit faster, instead of just hitting enter 3 times, you can also do this to the power of 3. Make sure to use parentheses, and then you're going to arrive at the same number, $4.316 billion more or less, which is also the number over here in the Excel sheet. So now you can also say, okay, we have these 2 discounted current enterprise values, well, after the merger. Then you can also say, all right, the midpoint valuation, which is simply going to be the average valuation between these 2 numbers, between the low multiple and the high multiple, or the low valuation and the high valuation, is going to be $4.12 billion. Right? Because that's simply the average of the low one and the high one over here. $4.12 billion. Very well. So now we know the enterprise value of Li-Cycle after the merger. We, in the end, of course, want to know the fair price per share. Well, in the beginning, in one of the first steps, we said that there's a difference between the enterprise value and the equity value, or the value of the company and the market cap of a company. And the difference is the amount of cash on their balance sheet. We said that, well, a market cap basically consists of 2 things, cash and enterprise value. Well, with that knowledge, what we can do is we can take this enterprise value, we can add the amount of net cash, and then we would arrive at a market cap, right? So if you do that, if you take all these enterprise valuations for the midpoint, the low valuation and the high valuation, and you add the amount of net cash, which is the amount that they're going to have on their balance sheet, $566 million, you're going to arrive at these fair market caps, if you will. So for the low end, you're going to arrive at this number, 4.5 billion more or less. For the high end, it's almost 4.9 billion. And for the midpoint valuation, it's almost 4.7 billion. Okay, so you have these market caps. Now, the only thing that you need to do to arrive at a fair price per share is to take those market caps and divide them by the amount of outstanding shares. Well, at the beginning of this valuation, we said that there are going to be 166.5 million shares outstanding after the merger. You have these market caps. You can divide them by the amount of outstanding shares, and then you're going to arrive at these prices per share. So again, for the low valuation, we set market cap 4.5 billion, 166.5 million shares outstanding. That is going to give you a fair price per share of $26.96. For the high valuation, you would reach a price per share of $29.32. And for the midpoint valuation, that would be $28.14. So again, based on the EBITDA of $339 million in 2024, based on a range of multiples, EBITDA multiples of 20x on the low end, 22x on the high end, you're going to arrive at these fair prices per share. Again, keep in mind assumptions, right? As I always say in all my videos, all my SPAC valuation videos, we are always taking a look at assumptions. You don't know for sure this company is actually going to go to $700 million in revenue in 2024. You don't know for sure that in 2024 they're going to have $339 million in EBITDA. You just don't know. And also the multiples, maybe this is one of the worst companies out there, and maybe this doesn't deserve a multiple of 20x to 22x, right? Maybe this is one of the worst companies out there and they only deserve a multiple of 6x, okay? Or maybe this is one of the best companies in 2024 and they deserve a way higher multiple, 36x. Who knows? Who knows? So it's really difficult to come up with a fair multiple. That's probably one of the most difficult things. Because let's actually say, let's go back to the sheet. Let's just, instead of using a low multiple of 20x, let's use a low multiple of 15x. And let's use a high multiple of, I don't know, 17x. Well, your fair midpoint price per share is going to go lower to $22.25. And before that, that was actually, let's see, $28. So there's a difference of almost $6 per share if you change those multiples. Also, if you don't have this EBITDA, if they don't achieve an EBITDA of 339 million in 2024, maybe, I don't know, maybe they're just doing very horribly and they only achieve an EBITDA of 200 million. Well, then your fair price per share is going to be only $18 per share, a fair midpoint price per share, instead of that, $28. So there's a $10 difference per share. Also, another factor that could be important as well to note is the amount of outstanding shares. I said that because of warrants, because of earnout shares, because of share dilution, because they are going to issue more outstanding shares, right? They could raise this amount of shares from 166.5 million shares. Maybe they go all the way to 200 million shares. Well, then your fair price per share is also going to drop $5 per share. We went from $28 per share, now we are at $23 per share. So there are just a lot of factors that are going to change this calculation, okay? The amount of outstanding shares is going to matter, the amount of net cash is going to matter, the EBITDA or the revenue you're looking at is going to matter, the range of multiples is going to matter. So there are a lot of variables that have an impact on the price per share, on the fair price per share of this company. I hope that makes sense, okay? But that's something very important to keep in mind. Because, yeah, it's just, again, SPAC valuations is not just a holy grail you can always use, you can always reference to. It's going to change over time as well, right? Again, if Lifecycle turns out to be the worst company ever, valuation is going to be lower. If Lifecycle is going to be the #1 in battery recycling, it's probably going to be higher. So, yeah, I hope that I have made my point clear. Okay, so that was the first method. That was the first method for a PDAC, for a life cycle. If you have any questions, let me know. Meanwhile, I'm going to take a sip of my water and let my mind relax for 2 seconds. I come well prepared. I have 2 glasses of water, so hopefully I'm not going to need a 3rd glass of water. Okay. If you're ready, then we're going to go to number 2, which is the second company that I'm going to do a valuation for. What's up, Andres? We just got finished with the first valuation. So you're just in time for the second valuation, which is going to be the one for Microvast. Ooh, and Andres has a question. Let's bring it, Andres. Are you also Portuguese, by the way? Big Dog Lane wants vodka. Let's go. I can actually, no, I can't, right? Pin message, remove. No. I wanted to put messages on screen, but I think I need another application for that. Insert ad. I can insert ads as well. That's crazy. What? That's funny. I haven't really been using YouTube Live for a long time, so. I have a question by Daniel J. What? What do you mean? The best classroom that I've ever had. Thank you so much. Thank you, Food and Love. You've got the best name. I mean, food and love is like the best combination in life, right? Thoughts on market correction? I'm not going to talk about that just now. But if you want to have any thoughts on market correction, maybe check out the YouTube channel of Real Vision. They just released a few videos about that, I think. Basically answering the question, are we in a bubble right now? This is such an underrated channel. Thank you, Ricardo. Thank you. I really appreciate that. But yeah. Keep in mind, I just started out, right? I just started out a few months ago. I started, I think, in September 2020. And, well, I think I've already grown faster than I expected. I was going to be very happy if I would have 1,000 subscribers by the end of the year, and I definitely went there. Yeah, so right now we're over 5,000. I actually wrote a... I'm not sure if you're into blogs, by the way. Let's cool our minds down for a second. So I just wrote a new blog thing-ish. And if you're in the Discord, you're probably going to get an email for that. If you go to my website, nesami.com, and you click on blog, today I wrote a small article about like hitting 5,000 subscribers and people reaching out to me and stuff like that, which is, yeah, not something I'm going to do right now. Short sellers, I had a pretty horrible week with regards to stocks because Ag Eagle and eHang both received like short seller reports. They went down quite a bit in a very short amount of time. So yeah, I'll talk a little bit about that. And I'm talking a little bit about NFTs, which is quite interesting. It's a crypto thing, non-fungible tokens. I think they could be pretty big in the future, for sure. Let's see, great breakdown. Do you personally invest in any of the SPACs you evaluate like this? Sure. Let's see, portfolio. So this is my portfolio right now. All my stocks I'm currently holding. These blue stocks right here are the swing trades that I currently hold. As you can see, I'm currently holding BFT, so PaySafe. I'm currently holding GIK, so that's Lightning Motors. I'm holding IPV, which is AVA, the LiDAR company. NPA, which is the AST Space Mobile SPAC. Well, maybe you can consider Hyliion and Armo as SPACs as well, but of course they are after the merger. Oh, and TSIA, of course, as well. They are going to merge with Latch. So I hold those SPACs as a swing trade. So far, I don't think any of those swing trades are going to make it into my long-term portfolio, but I'm not entirely sure just yet. I need to do some more research. I'm quite interested in Latch, for example, TSIA. But I think that it might be a while before they can actually start really ramping up their services. And I also saw that there are quite a lot of negative comments about this company. I mean, user comments. In the beginning, I do suppose that's quite obvious because in the beginning, their products are not going to be top-notch just yet. But yeah, that's could be an issue. So those are the swing trades I have. And then all the companies you see over here. Actually, not all of the companies, but most of the companies you see over here, especially the purple tags, are companies that I probably hold for the long term. I'm not entirely sure about CFII just yet. I was going to hold that for the long term, but there are also definitely some bearish signals for that as well, which I disclose to my premium members. By the way, if you want to get into the premium member stuff, then you can definitely check that out, and you can get some additional research, some additional due diligence, some additional stuff that I post, and some alerts as well. Holy shit, Food and Love bringing the $10 donation. Thank you very much for that. That's insane. That's a fun fact. That's my very first like donation. Do you even call this a donation? I don't even know. That's awesome. Thank you very much. That's cool. Epic stuff. Okay, thank you for that. Maybe instead of donating, maybe join the Discord Premium. So then you actually get something in return as well, instead of just giving money. But really, I appreciate it. Thank you very much. Thank you very much. Okay, so those are my holdings. Basically, this is my entire stock portfolio right now. With regards to crypto, I hold these cryptos, so Bitcoin, Ethereum, Chainlink, Aave, and Polkadot. That is basically my portfolio. Okay, let's see. Do you have anything else before we get into Microvast? Table in this website to use the valuations you do. If you want the valuation sheet, you just need to go to the Discord, and you're in Discord, I see. So, SPACs, you go to SPACs, and you go to pinned messages, and you're going to go to this SPAC valuation sheet. And that is going to be more or less the same sheet that I'm going to be using today. I hope that makes sense. Just read the title of the chat. Got excited. Whoa. That's good. Ricardo is on Ag Eagle. Yeah, man. It's had a heavy week. But, I mean, short seller report was really weak, to be honest. I mean, they didn't really disclose any bad stuff, just like they did with EHang, for example. GIK has been a digging snail. Yeah, GIK hasn't really done a lot, right? I'm just going to hold this until the merger, probably. So that's going to be interesting. Okay, I'm going to go... Yeah, Lilium. I am probably going to go into that a little bit later, I suppose. First of all, I'm going to go to the second method that we're going to use for Microvast. Lilium. So that was, I can't remember exactly. You were talking about Lilium. That's going to be a SPAC as well. Let's see. Definitely check out Lilium, German maker of eVTOL. But is it already public? Lilium. Doesn't seem to be public. Rumored with going public through a SPAC deal. Okay, cool. So we don't know the SPAC name just yet, right? Could be cool. Okay, so let's see. Let's click this away. We don't really need this. Oh, by the way, if you need these investor presentations, one of the ways you can do that is by going to spactrax.com, SPACTRAX. You can go to SPAC profiles. Then you can type in the name of the SPAC or just like the ticker symbol, which in this case is THCB, which is the second example we're going to be looking at, Microvast. And then they have the target presentation over here. You can just click on it and it's going to bring you to the investor presentation. Now, this is the investor presentation as it's published or submitted by to the SEC. And usually the quality is a little bit lower compared to the investor presentation you can usually find on the website of the SPAC or the company that's going to be acquired. So what I usually do is I just type in like Microvast investor presentation, and you're going to go to Google, and usually it's right over here, investor presentation. And yeah, it's just a little bit higher quality with regards to like, yeah, just the numbers and stuff. You can find it a little bit easier, okay? Very useful website, by the way. You also have a calendar. Here you can see important information with regards to SPACs. Like this week, well, of course, we have the SPAC SBE, which is going to have another merger vote on Thursday. Hopefully, they're going to have enough votes this time, but probably they will have. So yeah, a very useful calendar, and also the latest activity is one I use a lot to check for any like new S4 filings and important updates with regards to SPACs. Very well. They were in talks with ZNTE. Let's see. Okay. Okay. Thank you, Tom. By the way, you are from Belgium or what? Because I think you were commenting about me being from the Netherlands, right? I am. Okay, let's go. We've talked about life cycles, so let's just talk about Microvast. So Microvast is also a battery company. Again, I haven't really done additional research. I just scrolled really quickly through this investor presentation. So let's see if we can find anything. CEO and founder, Yang Wu. I usually like it when companies have a founder, which is, well, what do you call it? A founder CEO? Man, I forget the word, but whatever. You know what I mean. That the current CEO is actually also the founder of the company. Joined in 2006, so this company has already been around for 14 years or 15 years. That's quite something, actually, if that's actually true. Let's actually take a very quick look. Microvast. Can we see that? Yeah, 2006. Okay. That's interesting. Gewoon Nederland, hoor. Mooi zo. Yeah, I thought you were saying u to me, which is usually something like Flemish people do, right? Found this channel by YouTube recommendations. Just subscribed. Let's go. Thank you, John Deere. John Deere. Beautiful tractors. I grew up on a farm, by the way. Beautiful tractors. Anyways, thank you, John Deere. Welcome. Okay, so Microvast, battery company. Let's see. So they're going to begin battery production in 2021, this year, in Berlin, Germany, actually. That's pretty funny. Did they already start producing in China? I think they already started producing in China as well. So it looks like they already have a business model, but I believe they don't really have a lot of revenue just yet. Well, they do have quite some revenue, but not like an insane amount, right? I think that's over here. Yeah. So I think this is the revenue number. Let's see, this is page 20. This is actually better. So here you can see the revenue of this company scaling up. And this is sometimes something that worries me a little bit. So they have been around for 14 years or 15 years. They, in 2020, had revenue of $101 million. In 2021, they expect that to go up to $230 million. And then in 2030, they expect to have $6.8 billion in revenue. That's sometimes, I find that a little bit odd sometimes, because they have been around for 14 years or 15 years. And now all of a sudden they start saying that they are going to grow like 100% each year. Well, not each year, but for a few years they do expect to grow at almost 100%. I'm just not sure if they're going to achieve that. If they're going to achieve that, that is going to be awesome, because then this is going to be an awesome company to invest in right now, I would say. So yeah, always keep that in the back of your mind as well. To be a little bit like critical, if you will, a little bit skeptical of these future predictions, predurptions, as Crown's Crypto Cave calls them, predurptions. Yeah, be a little bit skeptical over there, okay? With regards to the EBITDA, they right now have a negative EBITDA of minus 12 million. And in 2020 or 2030, they expect that to go all the way up to 1.5 billion. And that is going to give them an EBITDA margin of 23%. So again, 23% basically means that the EBITDA is 23% of their entire revenue, okay? Very well, very well. So let's see if we can find some numbers, or let's see if we can find some transaction details. Oh yeah, I think this is in the beginning of this investor presentation actually. And they weren't very clear with regards to their transaction details. So let's actually see if we can find it. It should be over here. Yeah. So usually what SPACs have is a very nice breakdown on the amount of shares that are going to be outstanding, the percentages that are going to be provided to the SPAC and the founders, etc. Right here, it's a little bit difficult to find, but I did notice that they have it right over here in the very small letters in the footnote. Okay, so they at least say, okay, we have a pro forma equity value of 3 billion. Let's now find why that is 3 billion. And let's also go to our Excel sheet, which is over here. That is PDAC, and this is THCB. Let's see. Let's make this a little bit smaller. Let's make this a little bit bigger. We're going to be having 300.5 million shares outstanding after the merger. And that includes all these shares that are right here, but well, for now that doesn't really matter too much. Okay, so the amount of outstanding shares is going to be 300.5 million, which is the number that I put over here in my Excel sheet. And again, keep in mind, because of warrants, because of earnout shares, that number of 300.5 million shares outstanding after the merger could be higher at the end, okay? Keep that in mind. For now, however, we're going to be working with this number over here. Very well. So if you take that share price of $10 per share and you multiply that by the amount of outstanding shares after the merger, 300.5 million shares, you're going to arrive effectively at that market cap of $3 billion, right? So pro forma, after the merger, this company, Microvast, based on a share price of $10 per share, is worth $3 billion, okay? Important. Because some people, again, say, well, this SPAC is only, I don't know, maybe 300 million or 500 million. No, you need to look at all the outstanding shares after the merger. Very important. Very well. So that is the pro forma market cap based on a share price of $10 per share. Now, with regards to the amount of net cash they're going to have on their balance sheet. First of all, what they say is, we have $3.0 billion in pro forma equity value and $2.4 billion in pro forma aggregate value. They have a little bit like different names, but I believe pro forma aggregate value is simply the enterprise value, okay, the firm value. If you go back to the footnotes, we can see in the number over here, number 5, I believe. Yeah, so in the footnote number 5, and I'm going to zoom in a little bit more so you can hopefully see this a little bit better. This footnote over here, they say that they have a debt balance of 171 million. Okay, so that's a net amount of cash of minus $171 million. They also say they're going to have an amount of cash on their balance sheet of $772 million. So that's a plus. Okay, so that plus 772 is a positive amount of 601 million. They also say that they're going to have a net amount of $40 million in estimated transaction expenses. Quite expensive, by the way, but okay. So this is a negative number, minus 40. And then they also say that they have $30 million in debt repayment. So I'm not entirely sure, not 100% sure if you need to subtract 30 million or add 30 million, because I'm not sure if they want to say, okay, we have 171 million and we're going to subtract 30 million from that. So that would leave a net amount of debt of 141 million. Or they say, well, we have 171 million after we have paid $30 million in debt. You know what I'm saying? So I'm not 100% sure if this is something you need to add or if you need to subtract this. And yes, this will be uploaded afterwards, Aitor. So have fun at the party. Oh wait, you're late to the party? Okay, this is not a party. I've got only water here, not vodka. Anyways, so I'm not entirely sure if we need to add or subtract the amount of debt repayment. I'm kind of guessing that they mean to say that they have $171 million in debt and they're going to pay down $30 million of debt of that 171 million. You know what I'm saying? So basically the net amount of debt is probably going to be 141 million instead of 171 million. So in that case, you would need to add back 30 million. Right? Are you still following me? I hope you agree with this. If you don't agree with it, let me know. And then, let me know. Because also the thing is, we saw that the market cap or the equity value is 3 billion. And the pro forma enterprise value basically is 2.4 billion. So again, if you take this amount of net cash of 591 million, you would effectively arrive at more or less $2.414 billion. So that kind of makes sense to me. But I'm not 100% sure about that. So yeah, again, I'm not 100% sure if this is the correct amount of net cash. Okay. But all of this is based on a price per share of $10 per share. Well, if you go into TradingView and you go to THCB, you can see that the current price per share is $18.38, which is also the number that I put in here in my Excel sheet. And that means a few things. That means that the current market cap, the pro forma market cap, has gone up from 3 billion to 5.5 billion already. Okay. So the pro forma valuation, the pro forma market cap of this company, based on a price per share of $18.38, is already $5.5 billion. Okay. So Microvast is already worth $5.5 billion. Keep that in mind. It's important. Then if you subtract the amount of net cash, which is going to be under balance sheet, you're going to arrive at this enterprise value of $4.9 billion. So again, market cap minus net cash is enterprise value. Very well. So currently, based on a price per share of $18.38, the company, Microvast, is worth a little bit more than $4.9 billion. That's already quite a bit, especially for a company that isn't really producing a lot just yet. First time here, but loving the stream. Welcome, Pavan. Great content. Thank you. I appreciate that. Very well. So this is the pro forma enterprise value and the pro forma equity value, or pro forma market cap, if you will. If there are any questions, let me know. I'm going to take a little sip of my water. If there are no questions, we are going to go to the fair enterprise value. Fair enterprise value. Let's go back to this. Let's actually make it a little bit bigger. Let's go all the way down until we find the sheet that we need, which is going to be this one. So, Pavan tries to keep up taking notes. Love it. Actually, Pavan, if you look at the video that I uploaded on Friday, there's an entire SPAC guide of all the steps that I'm doing right now as well. And, well, that might be a little bit useful as well, okay? And I'm also going to upload this live stream later on, so then you can actually watch this back as well. Okay. So for Microvast, we're going to be looking at a fair enterprise value. We, instead of the EBITDA, which we used in method number 1, right now we're going to be looking at the revenue of Microvast in the future. Okay? For the fair enterprise value, we need two numbers. First of all, we need the amount of revenue in a certain year, and we need a certain revenue multiple. Well, the revenue for a certain year is very straightforward. And by the way, for this valuation, we're going to be looking at all the numbers of 2025. Why 2025? Well, that's the number they also use to compare themselves with other companies, which we're going to talk about in a second. So 2025. Well, not sure if it's close to this one over here. Yeah. So here we can see all their revenue, their predicted revenue, of course, and predicted, as always, is an important word. Their predicted revenue numbers over the next coming years. In 2025, they expect to have $2.348 billion in revenue. $2.348 billion in revenue. So that's the first number we are going to be using. And it's also the number that's over here. So that's a little bit easier. And we saw, well, the enterprise value currently, or not currently, based on a price per share of $10 per share was 2.4 billion. So the revenue to enterprise value ratio is almost 1, right? Enterprise value 2.4, revenue almost 2.4 as well, 1. Okay. Exactly what we see over here as well, a revenue multiple of 1x. The question now is, what is a fair multiple? Because 1 might be too low. Maybe it should be 2, maybe it should be 3, 4, 5, 6, 1 million, whatever. So what we're going to do is we're going to take a look at comparable companies in the space out there. And let's take a look at what kind of revenue multiples they are trading at. So if you take a look at QuantumScape, for example, we don't see any numbers for 2025. If you take a look at Romeo, for example, we do see a multiple of 1.2x. But of course, Romeo is a little bit in the same boat as Microvast. They have a little bit of revenue, but they don't really have a lot of revenue just yet. Well, we can also take a look at companies that already are quite well established. Companies like Ballard, Plug Power, Tesla, NIO, CATL, Proterra, Nikola. And we can take a look at what kind of multiples they are trading at. Well, if you take a look at these multiples, you can see quite high multiples, like Ballard and Plug Power and Tesla have quite high multiples. And my question to you is actually, what do you think is fair for Microvast? Is it fair to say that Microvast should be having a high multiple, just like Ballard, Plug Power, Tesla? Or is that too high? Should we maybe be looking at these lower multiples? Should we be maybe looking at Proterra and Nikola of like 1.9x, 1.8x? Or should we be looking more or less in the middle at NIO, at CATL, which is also a battery company, of 4x, 4.7x? Well, they say the median number of these companies is 4.7x. The median is simply the number in the middle. If you put them from low to high or high to low, as they did over here as well, from high Ballard 16x to low Nikola 1.8x, then the number in the middle is going to be 4.7x, which is the number of NIO. So they say, well, a median fair multiple or a median multiple for these companies 4.7x. Now my question to you is, do you think that could be a fair multiple? Do you think we could maybe be looking at a multiple range of 4 to 5x? 4x on the low end, 5x on the high end. Actually, let me know. Maybe you can say, well, maybe that's a little bit too high. Maybe we should be looking at 3x to 4x that changes a lot in the calculation. So if you have any opinions about that, let me know, and if not, then I'm just going to go on with 4x to 5x. No one protesting, so that's a good signal. Okay. So we now have our numbers. We've said in 2025, they're going to have $2.348 billion in revenue, which is the number that I put over here in my Excel sheet. We said, well, in 2025, if you look at these companies, they are trading at a median multiple of 4.7x. Well, we could say, okay, let's give ourselves a range of multiples. Let's give ourselves a low multiple of 4x and a high multiple of 5x. Very well. So if we pull up our calculator, we can now make our calculations. We can say, all right, $2.348 billion in revenue in 2025. Let's first multiply that by the low multiple of 4. That is going to give you an enterprise value of $9.392 billion with a B. Very well. It's also the number that I put over here in my Excel sheet. For the high valuation, if you go back to that revenue of $2.348 billion in 2025, and we now multiply it by the high multiple of 5x, you're going to arrive at an enterprise value of $11.74 billion. So that is also the number that I put over here in my Excel sheet. Then you can also say, well, what is the average between these two numbers? Well, the average of this number and this number is this number, $10.566 billion. So the midpoint fair enterprise valuation in 2025, or not in 2025, but based on revenue in 2025 and based on a fair multiple in 2025, a midpoint valuation would be $10.566 billion. The fact that we have been looking at 2025 numbers for the company itself and also for the similar companies, the comparisons, means that we don't need to discount it back to the current time, just like we did in method number 1. Because in method number 1, we were looking at multiples from 2021 for comparable companies and 2024 for life cycle. Now, we're looking at 2025 multiples of Microvast and also 2025 multiples of the comparable companies. So again, that means that we don't need to discount it back to the present. So that saves a little bit of time, saves a little bit of stress and stuff like that. Okay, so we don't need to discount this back to the current time. So what we can now do, this is PDAC, this is the wrong one. So let's go to the correct one over here. We can now say, these enterprise values, we want to go to a fair price per share. How do we do that? Well, a little bit earlier we said the difference between the market cap and the enterprise value is the amount of net cash they're going to have on their balance sheet. Okay. Well, if you take these enterprise valuations and you add back the amount of net cash, which again, as we calculated, was $591 million in cash, you're going to arrive at these fair market caps for all these multiples. So for the low multiple, you would arrive at a fair multiple, or sorry, a fair market cap of $9.983 billion. For a high multiple, you would look at a fair market cap of $12.3 billion, and a fair market cap for the midpoint valuation would be $11.2 billion. Okay, then the very last step would be to take these market caps and divide them by the amount of outstanding shares after the merger. Aha. So if you do that, if you take these market caps, these 3 market caps, divide them by the amount of outstanding shares, which we said was going to be 300.5 million shares outstanding after the merger, you're going to arrive at these fair prices per share. So for the low end, $33.22, for the midpoint valuation, $37.13, and for the high valuation, $41.03. Now these are quite relatively high prices because currently the stock is trading at $18.38. But again, you could say that these multiples are too high, right? Maybe you say these multiples are too high and maybe we should be looking at a multiple range of 3x on the low end and 4x on the high end. Then the price would already change to $29 on average, a midpoint valuation of $29. Okay, you can maybe even make the case that this should be even lower, maybe 2x to 3x. Then the midpoint valuation is already $21.50. Okay. So there are many things that you need to take into account. You can also say, well, the multiple is not the problem. Multiple is fine. Multiple from 4 to 5x, no problem. But the revenue, I'm not sure if they're going to go to a revenue of $2.348 billion in 2025. Maybe you think this company is only going to go to $1.5 billion in revenue in 2025. So if you do that, then you're also going to see that the midpoint valuation is going to go to $24.43. Okay. You can also say, well, you know what? The revenue is fine. The range of multiples is fine as well. The thing is, I think they're going to have many warrants that are going to be exercised after a merger. I think there are going to be many earnout shares that are going to be added as well after the merger. I think that they are going to issue more shares based on the amount of outstanding shares, based on the amount of authorized shares they currently have. So maybe you say, well, instead of 300.5 million shares outstanding, I think they're going to raise that to 400 million shares outstanding after a merger. Okay. So that also brings down your midpoint price per share to $27.89. So there are many, many factors: amount of outstanding shares, the amount of cash they have, the revenue in a certain year, the multiples that you're going to give to this company. All these factors have a very high importance to calculate the midpoint price per share. There are many variables, and each variable, if it changes, is going to impact the price. If all of the variables change, let's say, they issue more shares, they don't have any net cash anymore, they can't really get to this revenue, they're only going to get to, I don't know if this is enough zeros, yes it is, they're only going to get to $1.5 billion in revenue, the multiple range is too high. Well, if that's the case, this stock is only worth $13.13. Right? So there are many, many variables that you need to take into account. And of course, again, there are very many unknown variables. So you just need to make assumptions for all of these valuations. And that's usually the problem with SPAC valuations. There are many variables and many of them could be wrong. Okay. So I hope that makes a little bit of sense. Let's actually go back to the numbers we've been taking a look at earlier on. So yeah, based on 300.5 million shares, based on this amount of net cash, based on this revenue, based on these multiples, your fair midpoint price per share would be $37.13. Okay. Let's see if we have any questions. Don't know if this correlates, but recently saw some information in regards to the acquiring of metals for the future of these EV-like companies. Wonder how that distribution will take place, considering lithium ion will be the most sought after metal. And if they can monopolize on that, could these figures be even higher? Could be. Yes, definitely. With regards to lithium, there are some companies out there that are probably way bigger compared to Microvast. I, funnily enough, was actually looking today into some lithium, oh my god, companies, because I think it's an interesting sector to look at. I even made a little list of companies. So you have a few Chinese companies, like this company, Tiangqi, or whatever it's called, 002466, beautiful stock. And you also have this one, Gangfeng. I think this one is working with Tesla. I'm not 100% sure, but I think it is. GNENF. And there are also some bigger companies like Albemarle, ALB, Livent Corporation, LTHM, and this is a Chilean company, Sociedad Química y Minera de Chile, ole, SQM. So yeah, these companies could also be interesting to look at if you want to go into a lithium company. These have gone up quite a lot in the last couple of months, actually. And of course, Microvast could also benefit from that as well. So yeah, again, that could make, for example, you could say, well, maybe that means that their revenue is going to go up, right? Maybe they're going to have even more revenue than this. Maybe their revenue is going to go to, I don't know, 4 billion instead of 2.4 billion. And then, well, their valuation would already rise to $62 per share. In general, does the net cash of companies usually stay fairly consistent? That's a very good question. That's a very good question. So the question is, does the amount of net cash stay consistent? And I honestly think that's one of the questions that I should be focusing more on in my videos, because I actually didn't really think about this until just like a week ago when I was doing the evaluation for, what's the company? Freyr, I believe. So I made a video about Freyr, and they said, yeah, sure. Right now we have a positive amount of cash, like $800 million in cash. But we're going to need that cash. We're going to build a gigafactory. We're going to hire more employees. We're going to spend a lot of money in the next coming years to grow as a company. And they estimated for themselves, and I actually thought that was really good of this company. They estimated that like in 4 or 5 years time, they're going to have an amount of debt on their balance sheet of minus $1 billion. So they started out with a positive amount of 800 million, and they went to minus 1 billion. Okay, so they said, yeah, in about 5 years time, we are going to spend $1.8 billion we're going to spend $1.8 billion in a gigafactory, in employees, etc., etc., etc. So it's very fair to assume that especially growing companies, which are relatively small right now, they don't really have any revenue, they maybe don't have a lot of factories just yet, they maybe don't have a lot of employees just yet, that they're going to need to grow a lot. And for growth, they're going to have to invest. So you could say, okay, with these numbers, let's actually go back to, this. Let's say Microvast also needs to invest a lot, right? Let's say they need to invest like $1 billion in a factory, in employees, in whatever. So if they go from plus 591 million to, let's say they go to minus 500 million, then you would also see this midpoint price per share drop to 33.5. And it was, what was it? 37.13. So it already drops quite a bit if you change that amount of net cash on their balance sheet. So I don't think, especially for growing companies, the amount of net cash is going to stay the same. I think it's going to drastically decline over time. One other thing is, which is important to take into account, is this. Let's say the amount of net cash, they're going to use that a lot to invest. It's going to drop. They're going to have debt on their balance sheet. And they're going to say, well, we're going to raise money. We're going to sell more shares. We're going to issue more shares. And instead of, in exchange for those shares, we're going to get money, right? So they could say, okay, we're going to issue, 100 million additional shares. So 100 million shares, let's see, 100 million shares. Let's say the current price is this price right now of $18.38. So they would bring in $1.8 billion in cash, right? Okay. Let's see. Boom. So we can see that everything in one screen. So then you have 100 million additional shares. That's actually for a reference. So it started at $37, okay? Let's say they issue more shares, so 400 million in total, from 300 million to 400 million, an additional 100 million. And let's say this amount of money, first of all, decreases to like, let's say they spend 1 billion, okay? It goes down to minus 500 million. Let's say they now sell all of these shares for this amount of money, 1.8 billion. So this goes up again to like 1.3 billion. Let's actually see what that's going to do to the price. This is just a hypothetical. Well, the price is going to drop to $29.67. Okay? So here you can see that what could happen in the future is that they're going to use the money a lot. They're going to, instead of have positive cash on their balance sheet, have debt on their balance sheet. They're going to say, okay, we want to pay back this debt. We need money for that. How do we do that? Well, we're going to sell shares. So they have more outstanding shares, but they also have more cash on their balance sheet. But it does mean share dilution. It does mean that the price per share is going to drop significantly, okay, from $37 to $29. So that's something very important to take into account. And yeah, you can just use these valuation sheets on an ongoing basis, right? You're just going to use this like maybe every quarter when they have their earnings. They're going to tell you, how many shares that are outstanding, how much cash they have on their balance sheet, all that and that kind of stuff, and also their revenue and their EBITDA, of course. So you can actually create these valuations. Hope that makes sense, and it's a very important question. Thank you for answering. These companies need to monopolize on logistics sooner rather than later. Exactly. Because when the whole industry switches, everyone's going to want a piece of the pie. Exactly. So that, yeah, exactly. That's what they are going to do. Taking notes of this. Thank you. Thank you. What is the valuation for PDAC? Well, you can go back to the video, but I believe this was the valuation we came up with. No, that's actually not entirely true. I'm not 100% sure because I think I changed the amount of shares outstanding. I'm not sure if I do Control Z. No, exactly. Control Y. You probably need to go back to the moment when we were talking about PDAC because I can't revert this exactly. But maybe what I can do... just go back to the video. Have heard of SFTW merging with the space data analytics company called Black Sky. Yeah, I heard about that one as well. Let's see. SFTW. Osprey Tech. Yeah, exactly. So that was the Microvast. Let's just... I'm just going to answer some of your questions you might have. Let's actually go to SPAC Tracks. See if we can find the investor presentation. Probably going to need more water. Really damn. SFTW presentation. My throat is really dry, so sometimes I have to cough. Sorry for that. So this is the investor presentation of Black Sky. I've been quickly, very, very briefly looking at this as well. So they expect to have revenue going parabolic as well. In 2020, they had $22 million rather in revenue, and they expect to scale that up to $546 million in 2025. Okay, let's see if we can find some additional information about this company. Financial overview, revenue, we already saw that. Financial forecast, we saw that basically as well. So the pro forma market cap is 1.5 billion and the pro forma enterprise value is 1.1 billion. Okay, 1.1 billion enterprise value. Valuation benchmarking, very well. Look at that. Oh no, that's not entirely what I want. Well, not bad. I think you can look at this this page over here on page 33. So here you can see that they compared themselves with some other companies. Let's see actually what kind of companies. 2022. Yeah, okay, so they look at other companies of 2022. They probably use my second method that I've just used with Microvast. And they basically say, well, if you look at 2022, if you look at our competitors, then we should be trading at a multiple of 15x on the low end and 19x on the high end, revenue multiples, which are quite a bit higher compared to Microvast multiples, of course. So you can see that per sector, it also differs a lot. And they say, well, based on a revenue multiple of 15x to 19x, our enterprise value should be between 1.7 billion and 2.16 billion. So that's currently a little discount, of course. So we should be trading at more or less like 1.9 billion, and currently we're trading at 1.1 billion. So this should go up like, well, what is it, like 80% or something like that? Not entirely too sure. You can, of course, use the same Excel sheet as well, right? Let's actually do that very quickly. I think we can do this very quickly. So I'm just going to fly through this and not explain every step. So 147 1.7 million shares outstanding. Net amount of cash, 371 million. So these are the numbers pro forma, but their current price is $14.99. So the current pro forma enterprise value is 1.8 billion. Current pro forma market cap is 2.2 billion. If we scroll down, we can see that their revenue, did they say what kind of revenue they had? Not here. So let's first take a look at the the revenue of 2022. 2022 revenue is $114 million. Okay, let's go back here. So then we have a multiple range of 19 and 15. So that means that we have a range of 1.7 on the low end, 2.166 on the high end, and then these should be your prices per share. So low price $14.09, midpoint $15.63, high $17.18, which would mean that it's currently slightly undervalued or maybe fairly valued. So that would be the valuation based on the multiples of 2022. We can also take a look at 2023. Let's see if that changes a lot. So instead of 114 million, we are going to take a look at 2023 numbers. And that is $223 million in revenue. Very well, let's go back here to see what kind of range. So you have a range of 11 on the low end, 15x on the high end. That is going to give you 2.45 billion on the low end, 3.34, yeah, more or less, slight rounding issues, but shouldn't be a problem. And then you have these fair prices per share. Okay, so basically the further out you look, the more interesting it looks. So yeah, you could say that it's anywhere between, well, $25 and what was the lowest of the last one? Like $13. That's probably the entire range you could be looking at. I think the midpoint valuation for the other one was like $15.90 or something. So maybe you could say, well, if you take an average of both methods I've just been quickly using, well, 14 plus like 15.90, I don't know, that would be more or less $19. Okay, so maybe you could say a possible fair midpoint valuation for this company would be about $19 per share. That's a very brief bird's eye overview of SFTV, the valuation of Black Sky. Inlay just came here. What's up, Yuho? Is that Finnish? I'm not sure. Mines are printing crazy. PDAC seems to have no love because it's merging with a foreign company. Yeah, I don't know. Maybe. I haven't really been following PDAC very well, but let's take a look. I mean, I'm not sure if I wouldn't call this love or a lack of love. I think this is love. I mean, it's gone up 34.9%, so it's not too bad. But yeah, I do think it can have some more upside potential. And I kind of understand what you're saying, by the way, because I've been looking at TPGY versus SBE, and TPGY doesn't really seem to get a lot of love either compared to SBE, right? So you could make the argument that maybe because they are foreign companies, they get a little bit less love compared to American companies. That's actually funny. What's up, Big Smoke? How are you doing? Susan, can the price to sales ratio be used to value SPACs? Yes. Yes, exactly. That is basically what I've just done with this company as well. Which one did I use? This one? I think so. So basically the price to sales ratio is the same as the... not exactly the same. It's not exactly the same. I'm currently using a EV to sales ratio, okay? I'm using the revenue and I'm using the enterprise value. But you can also make an argument and say, well, instead of using EV to sales ratio, you can also take a look at price to sales ratio. So if you do that, you can simply say, well, yeah, let's create a possible... Let's create a scenario. So let's say you have a company, a SPAC that's trading at $10 per share, and now it's $15 per share. Let's say there are 200 million shares outstanding. Let's say you have 500 million in cash on their balance sheet. What else can we say? Let's make this 0 for a second. Let's make this just 2021. So you can say, Well, instead of using the EV to sales ratio, we're just going to use price to sales ratio. Let's say their sales, so their revenue in 2021 is, I don't know, $200 million. $200 million. Okay. Well, what would be a fair price to sales ratio according to you? Well, let's say maybe 10 is a fair price to sales ratio for this hypothetical company. Okay, so 10. So with a price to sales ratio of 10 and with a sales of 200 million, you would arrive at an enterprise value of 2 billion. Okay, 2 billion. So then you can, instead of using this midpoint valuation, you can just put 2 billion here. And then you can see that, well, with the current numbers we've been just using over here, you can see that the market cap, sorry, this was the one, with the market cap of 2 billion, your price per share would be $10, okay? If you have, for example, a company that instead of a price to sales ratio of 10 has a price to sales ratio of 20, your price, your market cap would be 4 billion. So that goes up to 4 billion. And then your price per share is also going to go up to $20 per share. So that is, of course, also a, you can use the price to sales ratio to value SPACs. Definitely. I just went very quickly through that. I hope that is no problem, but I hope you understand. If not, let me know. SFTW is letter of intent on Black Sky, yes. Oh, thank you for the €5, Yashin. That's really kind, thank you. I'm going to look into those just in a second, okay? Thank you very much. It's quite insane that people give money for this. What the hell? Again, if you want to, just a little commercial break, if you will. If you want to like sponsor me or whatever, you can also go to Discord. You can also join my premium Discord membership. And I offer some additional content over there. I offer all the research that I do on stocks and, oh my god, on stocks and cryptocurrencies. Sorry. I share that with my Discord premium members as well. I give alerts when I buy and sell stocks or cryptocurrencies. So you can join the Discord and you can go actually to nesami.com/member to arrive at this page over here, and you can join our premium Discord channel, which currently is $9.69 per month. Good number, right? And $7.89 if you're paying in euros. And you get a free trial as well of 30 days, so you can join for free for a month, and then you can see if you want to continue or not. That's up to you. Okay, let's see. Great explanation. Thanks. Can you look at Beachbody? Wait, what? You want to take a look at my Beachbody or what? What is Beachbody? FRX? Is this Beachbody? It's actually the funny. What the hell? FRX. What? That's funny. Oh wow, I didn't know this one. That's insane. Okay. Let's go very... Wow, that's awesome. I didn't know this one. Financial overview. Yeah, this already, I don't know. I'm quite skeptical about this, to be honest, because, I mean, you have flat growth, and then all of a sudden you're going to grow 30% per year. I don't know, bro. I don't know. EBITDA going down, and then all of a sudden going up. I don't know. Pro forma enterprise value of 2.9 billion. Holy crap. Okay. If you want to take a look, I would probably take a look at this page over here. So page 34 with the valuation benchmarking. Sorry, I missed it. Where do we get the discount rate? So the discount rate is something you basically think about. You don't really get that somewhere. For all the SPACs that I'm doing is 20% because all the investor presentations are using 20%, but it's kind of a random number, to be very honest with you. Yeah, you could definitely use a different discount rate, but usually 20% is used. I don't really have a good reason for that, only that all the SPACs are using 20%. I'm very sorry. Okay, sorry, Yashin. I need to get to your point right now. Thoughts on SunW? Let's see, Sunworks. Okay, so I don't know the company. Let me start out with that. According to TradingView, it has a market cap of 380 million. So let's actually go to Yahoo Finance and see if that's actually correct. SunW. Sunworks. Suppose it's like solar energy. Yeah, so 380 million. Okay, let's quickly go to Sunworks. Solar Solutions. Yes, okay, so it's a solar company. Very well, very well. Let's go back to TradingView. Let's see if we can find some financials for this company. Total revenue 2020. This is the trading. So $43 million in revenue. Okay. So they currently have a price to sales ratio of like, well, what is it? 9 to 1. Well, price to sales ratio of 9. So that's not too bad, I suppose. It's not too bad. According to technical analysis, I could see this stock dropping a little bit more. Let's actually take a look at the lower time frames to see if we can find some interesting stuff we can talk about. There is something. If you look at the 4-hour chart, you can see, for example, that it already touched the 55 EMA, which is this white line over here. Seems to be trading a little bit underneath that, but I don't really think... Well, based on the indicators over here, you could say that it currently has some more downside to go, because this RSI is still trading underneath the EMA. And the MACD is still going down as well. If we go to the daily chart, we can see the same thing on the indicator, so indicator still going down. And I kind of think that this could actually start trading towards this white line over here. The white line is a 55 exponential moving average. And as you can see over here, it was also mainly used as support, more or less, right? Not entirely. It actually didn't really come down to the 55 EMA, but it was used often as support. It didn't really go below that. So you could say, okay, if that happens right now as well, we could see a move down to about like $13.50 more or less. So that could be a possible target, but I do think that's a very nice buy opportunity. And I even think that right now it's not a bad opportunity to get into this. Based on technical analysis, but also based on the price to sales ratio I've just uncovered. Of course, this is not financial advice. So I think this is not a bad moment. If you would want to start a position in this, what you could maybe do is dollar cost average into this company. You can maybe say, okay, I want to put, I don't know, $1,000 into this company, right? Maybe you want to divide that in like 4 amounts, 250 times 4. Maybe you put in 250 right now. Maybe you wait a week and put in another 250. Maybe you wait another week and put in another 250, etc., etc. So that could be one option, I think. But yeah, I don't think this is a bad company to put some of your money in. I think it's pretty okay. I do, let me actually go to this again. Overview. So what worries me a little bit about this company is that revenue is coming down in the last coming years. And that is a little bit of a worry for me. But of course, you could make the argument that solar energy is going to be hotter in the future. But so far, as you can see, in 2016, they had $86 million in revenue. Let's actually go back. Let's go to the weekly chart. Yeah, so exactly. So you can see that in the previous years, this stock was actually trading way higher. It probably was a public company maybe here, and then it started to become a... sorry, it was maybe a private company. Maybe right now it's a public company. But you can see that the price was actually way higher in like the 40s, almost the 50s. But it does seem to make a comeback. This could be a nice comeback story, to be honest with you. But you would need to see the revenue going up instead of going down, because I do think this could be an issue. Let's actually take a look at a quarterly. Yeah, even a quarterly is going down. So take a look if the revenue continues to go down. Maybe if you see the revenue going up instead, that could be a pretty nice moment to buy. If you for some good reason believe that it's going to go up again, then maybe it's not a bad buy. I already have these stocks over 1,200 shares in each of the above stocks. Okay, nice. So yeah, that's with regards to Sunworks. Keep that in mind. Look at that revenue going up or going down. I think that's quite important, because so far it's down, it's trending down for years, and that's not very good. So Ag Eagle, UAVS. This is a stock I own myself, and the company, or sorry, there was a company, I forget what their name is, no, that's the other one. Well, it doesn't really matter. There was a short seller that, Bonita's Research, I believe. There was a short seller that published a very short report on Ag Eagle. It's probably in the news section over here. Let's see, response. No, it's not. So, yeah, Benita's research. So they said that Ag Eagle is a pump and dump scheme. And the main argument for that is, well, many people think that Ag Eagle is going to work together with Amazon Prime Air. Ag Eagle is a drone company, and Amazon Prime Air delivers packages via drones. And they could be using Ag Eagle for this. I made a few videos about Ag Eagle, and well, there are some signals that could lead to Amazon working together, partnering up with Ag Eagle. Honestly, personally, I don't really think it's going to happen, but hey, could happen. But still, yeah, the stock went down a lot in a very brief amount of time. In one day, it went down 36%. And as you can see, it actually bounced right on the 55 EMA, the white line we've just been talking about for Sunworks as well. Okay, so it could be an interesting buy moment. I actually started this in a while ago in December 2020 when I started making videos about this. So my average buy-in is like $2.71, I believe. I don't really worry about the short seller report too much. Also because this company is rather low with regards to market cap. It's just like a $600 million market cap company. I think this company still has a lot of growth ahead in the future. Right now they have very low revenue, like $1 million in revenue. So yeah, price to sales ratio is incredibly high. I get that. But I do think they can have a very good future ahead of them, okay? Because I think, well, they're going to focus more and more on delivery, on like drone deliveries, or delivery drones rather, and I think that's going to be a good focus. I hope they're going to focus all of their energy on delivery drones instead of agricultural drones. Anyways, so I think the company has still a good future. With regards to technical analysis, you could say that there are some things that could indicate more downside. I think the exponential moving average don't really indicate more downside. But if you look at the RSI, it's still going down, for example. If you look at the MACD, it's still aggressively going down, of course. And if you look at this stochastics, well, this is a specific stochastics that I have from a certain course. But this could be interpreted as a sell signal as well. So that's a little bit worrisome, of course. But yeah, again, I'm not adding to my position here. I'm not selling my position either. I'm just waiting it out. And if it does actually crash a lot to like, I don't know, $5 or whatever, then I'll probably even add to this company. So those are my thoughts with regards to Ag Eagle, I think. And then SYN, I don't know this company either. So I suppose it's the first one, synthetics, biologics. I think biologics. I'm not a native speaker, so sorry. Biologics sounds pretty good. So I don't know this company, a very small company. I personally don't really look a lot at companies that have a very small market cap, in this case of 62 million, but let's see if we can find some more data on this company. So let's take a look-see daisy. They don't have any revenue, is that correct? Are they still researching? That could be maybe a reason for this. So yeah, currently they don't have any revenue as far as I can see. Let's take a look at the quarterly. So no revenue so far. That could be an issue maybe. I'm not sure when they're going to start having revenue. Clinical stage company. Development of therapeutics to preserve. You can't even see this because it's in the, you can maybe see it right now. Yeah. Okay. Yeah, so I'm a little bit not worried, but companies that don't have any revenue just yet make me a little bit worrisome, to be very honest with you. So I'm not sure what to think of this. But if you've done your due diligence, if you've done your research and you think this is going to be a very beautiful company, then sure, I get that. With regards to technical analysis, I could make the case that this is going to go down to about 75 cents. First of all, because of the 55 EMA, so this white line over here, but also because of some support that can be found over here because the low that was created over here. Okay, so that could be the case. That could be a case to be made for a bit of more downside to like 75 cents. RSI is also crossing the EMA, going back down, so that indicates more downside as well. MACD indicates more downside as well. So yeah, could be the case that it's going to go down a little bit more. Also keep in mind they're going to have earnings on the 4th of March. So if you own this stock, and maybe if you own a lot of it, maybe check out the earnings that they have on that date. And then, yeah, see if you want to continue holding this stock. Because again, no revenue sometimes worries me a little bit. But hey, you probably know more about this stock than I do. How did you know Juho was a Finnish name? Yeah, magic. Yeah, I don't know. Like, those names just seemed a very Finnish name. I'm from the Netherlands myself. So, yeah, I know a little bit about the European companies, of course, countries, of course. And so when I saw your name, I was like, that's probably a Finnish name. Is there any difference in doing these calculations using revenue versus EBITDA? Or would they just lead to the same share prices, more or less? Good question as well. You do good questions, by the way. It's very good. So there are usually differences. What I've been noting in the investor presentations is that companies and SPACs, and this is going to sound obvious, but they usually go for the method that is going to produce the highest price per share in the end using the valuation methods that I'm doing myself as well. What you can do to counter that, actually, is to do just both methods and see what kind of results you come up with. I usually don't do that because that makes the videos very long, and I want to stick to videos of more or less 10 minutes because, yeah, people just don't want to watch a video of like 25 minutes. But I think, yeah, it's a good question, and I think if you really want to dive into a company, you can just do all of it, you know? You can do revenue, you can do EBITDA, you can do higher multiples, lower multiples, higher price, higher amount of outstanding shares, higher revenues, higher EBITDA, lower revenues, lower EBITDA. So those are definitely things you can play with, and maybe just make an Excel sheet or something like that with all the valuations that you do, and just make the average, take the average of those valuations. So make like, I don't know, 10 valuations and take the average of that. That could be an interesting way to come up with a relatively fair price per share. I hope that makes sense. And again, good question. Susan, okay, thank you. Ooh, I don't know what I answered. Let's see, can the price to sales ratio be? Yeah, okay. Hi, thoughts on Oxley Cannabis? Seems very undervalued, Kevin Chow. Well, let's see, Oxley Cannabis. I don't know anything about cannabis stocks because I haven't looked into these companies. Company is worth $215 million. The graph actually looks pretty okay. It has been going down a lot since, well, for a long time, and until October 2020, they started uptrending. So I don't know anything about the cannabis market myself. I do hear a lot of people saying that in America they're going to start legalizing it more and more and more. So it's probably going to be a bigger and bigger market. So sure, then this could also be a beneficiary of that movement. Yeah, just has a market cap of 215 million. So let's see if we can find some numbers over here. More financials, overview. So the revenue is growing rapidly, as it seems. 2.4 million. The revenue is growing nicely, so that's good. Their net income also seems to, yeah. I wonder what they are spending so much on. So their net income is quite low. Their profit margins are low. So the question to you would be, how come they have quite okay revenue, but why do they have low income? Why do they have low net income? Why are they spending a lot of money? Are they spending a lot of money on marketing, or I don't know. That's maybe something you can look into. You can see that the amount of assets is going down, so they're probably spending more and more money. They're putting on more and more liabilities, so more and more debt. So that can be an issue maybe if you start seeing the amount of cash going down, the amount of debt going up. Could be an issue. Income statement, balance sheet, cash flow statistics. Yeah, so there are some things you can look at. So revenue, what they spend money on, if their debt is going to go up, if their cash is going to go down. With regards to technical analysis, I like it. It's just, yeah, making higher lows and higher highs, so that's pretty good. Can we see anything obvious? Not really. I just think it's going to start going, yeah, just It seems to be trading more or less, and not entirely, but more or less within a range of like this. It's not the most beautiful rising channel I've ever seen, but it seems to be trading more or less in this rising channel. So you could make the case that, well, maybe it goes down a little bit more to like, I don't know, like 27.8 cents, and then it goes up to like 40 cents or something like that. Yeah, that's basically everything I can say about this. RSI looks neutral. Stochastics, Crown Stochastics look neutral. MACD looks neutral as well. Okay then. Great info. What are your thoughts on GX? Is that a SPAC? Okay, what did you say about that? Cellularity, biotech. I don't have any thoughts about that, but it's interesting to see that they're currently trading at almost net asset value, almost the price where they started out with, $10 per share. Let's get rid of some tabs because they're annoying me. Let's see if we very quickly can get some information about this company. So Cellularity is a biotech company, very well. Let's see if we can find something interesting. I saw the word allogeneic, so I like that. Transaction summary. So we see an enterprise value of 1.3 billion, pro forma market cap of 1.7 billion. Okay. Where's your revenue? Or did I already scroll past the revenue? What? Where's your revenue, sir? I want your revenue. Do they have any revenue? This is not the revenue. Is it just a clinical stage company without any revenue? Because if so, then I can't say anything about it. Yeah, I think it's a clinical stage company, so I can't really say anything useful about this. This is basically just fundamentals and no like numbers, so I can't really say anything about that. Blockchain companies on fire. Valuation is going to be dangerously to a bubble range. What kind of companies? I don't know. Maybe. I mean, I'm not sure if blockchain companies are in a bubble, to be honest with you. I think blockchain companies are going to be the future, so yeah, I think they could be doing very well, but you do need to take into account that many companies right now seem to be just like putting the word blockchain on their website, and they're like, we are a blockchain company, and then they are not a blockchain company, but they have some kind of blockchain token that they use. You know, I was actually looking at a mobile communications company or something like that, and they said they were a blockchain company, but their mobile communication services was not blockchain. It was just a normal non-blockchain company, but they had some kind of weird token. I think this company was called Punware. So dangerous bubble range. Yeah, I don't know. I think blockchain is going to be the future. So it depends on the company and depends on what their plans are, I think. But I don't invest in blockchain myself yet, unless I come across a very good company. But so far, just invest in crypto. I have quite a lot of stuff in crypto. I think this method definitely provides a good starting point. Yes. Would it be safe to say that most investors should be starting here when valuing a SPAC? Well, yes. It's difficult. I'll say yes and no. I'll say yes because I think many investors are not looking at this, and they're just looking at, I think this stock is going to $50. I think this stock is awesome and is going to go to $100. You can see it, for example, with CZIV, right? The only reason that this is at $53 is because they are likely to go public with Lucid. But we haven't seen the transaction details yet. Maybe they're going to issue 3 billion shares, and maybe maybe the pro forma enterprise value is already going to be 100 billion. Who knows? Who knows, right? It's probably going to be way lower, of course, but I think it's like 12 billion, but whatever. So you don't really know the details just yet. Maybe you should wait for all the details to come in and then start investing, right? I understand that you can actually invest on this based on people thinking that it's a very good company, and purely based on that thinking, you can actually invest in the company thinking the price is going to go up. But then it's just like a social investment. It's not a financial investment anymore. It's not like an investment based on numbers. So I think many people are forgetting that there's a financial side to things as well. Many people are forgetting that SBE, for example, is not worth 1.4 billion because the SPAC is worth 1.4 billion, but this is like 12, 13 billion, right? So many people don't really look at that. And I think that would be good for starting investors to actually know exactly what the market cap is, if the enterprise value is fair compared to the competitors, compared to similar companies out there. So yeah, I think that's a reason to, yes, look at these SPAC valuations. On the other hand, SPAC valuations are just a tool, right? There are many, many factors. I was just talking about Lucid. The amount of, or just the fact that many people are going to be investing in Lucid can be a reason to invest in Lucid as well, just because it's like a social investment, right? Other people are doing it, so why not? Fundamental analysis. How good is the company? How good is the CEO? What kind of plans do they have? What kind of sector are they in? Fundamental analysis. Technical analysis. What does the chart look like? What does the RSI look like? Crown stochastics, what do they look like? MACD, what does that look like? So there are many methods to start investing. I think the best way is to look at all the methods and put that together. I personally started out with technical analysis. Now I'm doing SPAC valuation analysis. I'm also doing fundamental analysis. So I'm trying to combine all of these together to arrive at the best companies out there. I want the company that has the best undervalued stocks. I want the company that has the highest fundamentals, so the best CEOs, the best products, I want them to be the leader in their sector. And I want the graph to look pretty as well. I want to see that the graph has more upside to go as well. So I think that, yes, it can be a good starting point, but you also need to take into account this is not the only method. Hope that makes sense. Are there any other good or common methods of valuing SPACs that you'd recommend? Not sure. I can't really think of anything. I think just using the EBITDA and revenues and then multiplying that by a certain multiple is already a pretty good method. Because then you have the price to sales ratio or EV to sales ratio and the price to EBITDA or EV to EBITDA ratio. So I think these are pretty solid ones. Can you look at MBAC merging with Nuvi? Yes. I'm not going to do the entire rundown. Because I'm going to leave pretty soon. I've already been here for more than 2 hours. But it might be a company that I'm going to do a valuation video for, but I can bring you to Mark Hake, my buddy. Mark Hake, Nuvi. So, Nuvi. So the guy I did a valuation video with, not a valuation video. The guy I did an interview with, rather. He writes a lot about SPAC valuations, and I think he wrote a lot of articles, or some articles, about Nuvi as well. Maybe this is the main article. So this is an article he published on January 29th. You just Google Mark Hake Nuvi, and then you're going to arrive at this one. And he says, I now believe that Nuvi, or NBAC, is worth $34.50, or 81% higher than the recent price. I think his reasoning was, well, Switchback Energy is this high, so Switchback Energy has this multiple, so Nuvi could have this multiple as well, and if Nuvi has this multiple, they're going to arrive at $34.50 per share. So that's a possibility to look at, but I'm going to probably do a valuation video for Nuvi maybe this week. I'm not entirely sure. Could you take a look at the technical analysis for Corsair? Yeah, it's being hyped up more and more, right? I saw Jeremy from Financial Education talking about that. So that's going. Bitcoin is going up pretty nicely, by the way. Solid. Anyways, technical analysis, yes. So, Corsair, with regards to technical analysis, looks like a pretty good moment, to be honest with you. So let's draw a nice little line over here. Maybe let's draw another line. Yeah, it's a little bit less pretty. Wow, let's get rid of this line, whatever. Nope, this line. So I think it could be an interesting way to, or it could be an interesting moment to start buying right now. I noticed that they had their earnings and they probably, yeah, they were a little bit negative. So probably that's the reason for this sell-off. Current market cap is 3.6 billion. Okay, that's good. So one reason is the 55 EMA, the 55 exponential moving average, this white line over here. Currently, it's sitting right on top of that. And the 55 EMA is often used as a nice support line. So that's one reason. Second reason is that it looks like this is a line that is being held, it's holding up the price action quite well. It started out here, then it created a support over here. And then the same line created the support over here, created support over here. So it could also turn into support over here, right? So that's reason number 2. If we look at the indicators, though, I could make a case that, well, I could make multiple cases. I could make a bearish case and a bullish case. The bullish case would probably be that on the RSI we also see a nice line over here. You see? So a low, 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 low. This could turn into support as well. So that's a bullish reason. But on the other hand, it is trading below the exponential moving average on the RSI. So that's usually a bearish signal. If we go to MACD, it's still going down. So this is more of a bearish signal as well. Yeah, that's pretty much all I would say about that. So I kind of think that if you see this, well, this could already be a good moment to enter, but maybe you would decide, well, maybe divide the target amount you want to invest in, maybe in 2, maybe invest 1/2 now and invest another half in like a week or something like that, or 2 weeks or whatever. But yeah, mostly bullish. I think 65 to 70% upside, 30 to 35% downside, something like that. Andres, you're leaving? Bye-bye. Gotta go. Thanks a lot for answering my questions. No, thank you for being here already. Thank you for your very good questions. Very good questions. I heard you mention ALUS. Yes, I did a video about that. So maybe check out that video. I don't remember what I said in that video. I think I made that video like a few days ago. Do you think it's good value? I'm not sure what I said about that in this video. I don't know. Check out the video. Check out the video. CFII looks like the best SPAC at this moment, IMO. Yeah. ¿Qué tal, Ignacio? Pues vamos a ver CFII. Yeah, so I've made many videos about this one, and I'm just not sure just yet. I currently have it in my long-term portfolio, but I'm not entirely sure if this is actually a stock I want to hold in my long-term portfolio. I love their idea. I love their product. The question is, are they going to be able to execute? Are they going to be able to create the amount of revenue they predicted? Are they going to be able to decrease the amount of costs because they have really high costs at the moment? So that could be an issue, but I do like the company. I do like the product. I do like the CEO as well. So those are good things. But yeah, again, I'm not entirely sure if I'm going to keep this in the long-term portfolio. I shared my DD, my research with my premium members as well, and they're not sure either. So with regards to valuations, it's definitely one of the best SPACs, because I did a valuation for this one and the fair multiple was like $43.80, and it's currently trading at $11. So definitely. With regards to technical analysis, it's sitting on top of the 55 EMA, so that's pretty good. We can see that the RSI has already come down quite a lot, so I kind of expect if this if this EMA, this white line, is going to go up again, then we could see some more bullish price action for CFII. Yeah, that's pretty much it. And they're going to have their vote on March 5th, which is in 2 weeks' time, more or less. So I really wonder what's going to happen before the merger, because this could go a little bit like, sorry, not GMHI, a laser. could go a little bit like this. I was covering laser or luminar or GMHI, whatever you want to call it. I think when it was like at the end of November, more or less, when it was just like $10.50. And then it was just a few days before the merger, just like 1.5 weeks before the merger. Then it started to get some love as well. And then it started to go up like a lot in a short amount of time. Like, what was this? Like 350%, right? So this is something that could happen to CFII as well, but yeah. Probably not as beautifully as this, but yeah, it could happen, of course. It could happen. Okay, then. I'm going to probably leave in about like 5 minutes or something like that, because I've already been here for quite a while, but I do like it. Do you think SSPK is worth the hype? Is there hype? I know about STPK. What is this one again? Don't remember this one. SSPK. Wheat maps. Oh, yeah, okay. Yeah, I haven't really looked into this because of cannabis. I don't really care for cannabis stocks. So I'm not sure. Is it worth the hype? Je ne sais pas. Maybe. I don't know. Let's take a very brief look. So revenue. So they have a business model which is already working. That's good. They have good growth, which is good. 144. Revenue 205. Okay, so a low price to sales ratio, which is good. Not a lot of cash, but not bad. What is it currently trading at? $27. Okay, yeah. Yeah, okay. So with the current price, I'm not sure. With the $10 per share, I was like, yeah, sure, no problem. But with the current price, I'm not entirely sure. I don't know if you can find multiples. Take a look at page 39 of their investor presentation. See if you can find a fair multiple over here. They even misspelled EBITDA. That's a shame. But find out if you can find a fair multiple. Compare that with Wheatmap's multiples, and then figure out what a fair enterprise value would be. But I kind of think that it's currently fairly valued. It's probably not going to go up a lot more, to be honest with you. No financial advice. What kind of percentage do you recommend per share? Some say 5% max to save. It's really personal, I think. I personally like to have about 3/4 of my stock portfolio in long-term holds, so companies I hold for long term. And I have about I think 11 or 12 companies that are in that stock or in that long-term portfolio. And then the rest, so like 25%, are in swing trades, and those are usually lower percentages. So I think with regards to my long-term holds, it's like, I'd say like 8% per stock, more or less. Maybe even less. 5% max to save. Well, then you have 20 stocks, right? Yeah, I think having like 15 stocks more or less is pretty okay, because then I think 20 stocks is already quite difficult to take to keep track of all of them. But it's personal. If you like 10 stocks, then do 10, and do 10% per stock. Or if you like 20 stocks, then do 5. I think anywhere between 10 and 20 stocks is pretty good. It's pretty good. Lithium price is forecasted to skyrocket among other rare earth minerals. Yeah, I know. I'm not sure if you were around when I talked a little bit about lithium. So I said that I had been looking a little bit into lithium stocks. I pulled up this list of stocks. So these 5 ticker symbols. And I'm looking into those. I'm not investing in those just yet. But it could be an interesting... it could be interesting to invest in. But I'm not sure. I think Elon at Battery Day said something like, lithium is very easy to get, or something like that. So yeah, I'm not sure. Thank you, no problem. Thank you, no problem. Analysis on ACIC. I did a full video on that yesterday, so check out my channel, yesterday's video. Cool. Okay, I'm going to go very briefly through my portfolio because I want to see what kind of companies are earning or are reporting their earnings this week. And I think there are quite a lot of them, to be honest with you. So I don't need to look at SPACs or Hyliion. Hyliion. So we got Hyliion on the 23rd. This week is until the 26th. Okay. IPV is not publicly already just yet. Romeo is not this week just yet. No. Xpang. No. Let's see if we can find... I think there were like 4 companies that have earnings this week in my portfolio. Lemonade? Nope, that's the week afterwards. Square. Okay, so Square on the 23rd as well. T-Dog. What's up, T-Dog? On the 24th. 24. GPGY is a SPAC. Tesla. Ag Eagle. Upwork. Also on the 23rd. Oh my god. Upwork. 23rd. Workhorse. Is this week? No, week afterwards. Zoom, no. Galapagos already had it. Okay, so 4 stocks that are reporting earnings this week. 3 on the same day, on Tuesday, right? Yeah, on Tuesday. Hyliion, Square, and Upwork. And then 1 Teladoc on the 24th, which is definitely definitely something I'm going to be looking at. Definitely. Okay, cool. So, yeah. I'm going to go soon. Just going to go through the last 2 questions that I see. Any blockchain companies? Not really. I haven't really looked into blockchain companies. I don't look into Bitcoin mining companies at all because I already have been investing quite a bit in Bitcoin itself and other cryptos as well. So I don't really look into mining companies. Yeah, with regards to other companies, I don't know anything about blockchain companies. If you have any good ones, let me know. Does institutional ownership matter to you when you invest in SPACs? Not really, to be honest with you. I don't really look at that all of that much. No, I don't really care. It's usually more or less the same across all SPACs. But yeah, it means that shareholders get a little bit less of a pie, but I don't really care about that. Okay, cool. I'm going to wrap it up. Been here for like 2.5 hours almost, so that's awesome. Again, thank you. Thank you for being here. It's quite... Let's actually pull up the... let's see. Boom. Yeah. There you go. My face in your face. Thank you. Thank you for being here. I really mean that. And I really need to say that maybe even more often, because it's quite crazy to me that people are just watching me talk to a microphone and talk to a camera and talk to a screen over here. So that's quite insane to me. It's even more insane that people donate money to me. That's freaking insane. Thank you for that. I appreciate that. Thank you for your time. I think your time is valuable, so I appreciate that a lot. Anything else? Any questions you might have, let me know. You can always DM me on Discord. You can join the Discord for free. If you go to nesami.com/Discord, you can join it for free. If you would like to support me, you can also go and join the premium section of Discord, which is at nesami.com/member. You can also go there. And yeah, if you have any more questions, DM me on Discord. You can even send me an email on at support@nesami.com if you need. If not, then I hope you're going to have a beautiful, beautiful Sunday ahead. Or maybe for some of you, just like me, it's already 8:30 p.m. So you're just going to have a beautiful evening. Thank you for being here again, and hope to see you in the next one. Bye-bye.